Welcome to the Trading Lounge, and here we're looking at the long-term Australian market, the ASX 200, and this is the bear market from 2007 coming down. And just in Elliott terms, I wanted to go back over the longer-term picture here. Is that, and this is just out of textbook sort of theory, so take it with a pinch of salt, but essentially, the big bear market that we had, we were looking at 5 waves down, so we're classing that as an A wave. And if we get 5 waves down in the opposite direction, which this was, we had a bull market before that, so we've got 5 waves down, we'll be looking at a 3-wave counter trend, which would be an A and a B and a C wave here. Now this C wave here would normally pull, this B wave here, CB, would pull back 61.8% of this bear market that's moved down, which brings us into around the 5,400 mark there. So as I mentioned, it's just sort of textbook stuff, and we've been talking about this, for a few years now. So, but just sort of keeping on track of things, and the reason I'm bringing this up now is because we are getting closer to the 5,000 here, and as Gann would say, double tops are never the end of the bull campaign, but obviously this is a corrective rally through here. So what we're trying to work out is that we've got our target of 5,400. The C wave here, a C wave is always in 5 waves, so we've got to count 5 waves up through here. That's in 5 large waves. That's what we're looking at here, where the B wave here would be in 3 waves, in this case here. So we've pretty much got that. So when we look at that here, this is a monthly chart here, so we can see that we've got, I won't go into it, but we've got this structure that's moving down through here, so that would be the A wave, and then we would have the then we've got the primary A, and then we're looking at this B wave through here as such, and we're looking at this move through here. This is another A, B, and C, a smaller A, B, C. So we're looking at this being an A, B, C and through to here. And of course, this A, B, C would pull back 61.8% of the length of this A wave here, which it basically did at around the 3,800 here. So now we're looking for 5-wave structure to the upside through here. And, the market's moving quite strong now, as you know. The finance sector has been leading that, and the material sector has been lagging a lot. But the base metals are starting just to sort of warm up a little bit now, and we'll have a look at that in a moment. But the finance sector is certainly leading it, and Combank has always been a leader in these cases. So, banks are normally the first ones to lead out of a bear market, because obviously they're supplying the fuel for the system, the money. But yeah, look, that's kind of what we're looking at through there, and I don't know how high that's going to go as such, but like I say, it's just textbook stuff. Once that moves into play, then we'll have our large C wave down through here in 5 waves, which would be this C wave through here. Pretty long and laborious, but that's pretty much where the debt situation in real terms will get solved. So somebody's got to pay the money back, so to speak. But in the other sense too, is that this is all at the 5,000 level, and most markets will be working across there, the closest largest number. So the 5,005 being the second strongest number in the market is our balance line for this massive correction from from the bull market moving up and so forth. So it is working across this, and so it's kind of good to understand this, because if we do start getting this down through here, they say that C waves are where wars basically start. So it's unfortunate, but it's a pretty laborious, slow sort of track coming down through here. But yeah, so it's just good to understand this for larger term investments as well, I guess. But anyway, we'll watch it all sort of play out, and as we do. So that's that. And that's that. And the commodities as such, I'm just going to use this this chart here. This is the Dow Jones UBS Commodity Index. And the reason I wanted to use this one for is it just gives a balanced view on all the commodities as such. And what we're sort of looking at here, just to give you a bit of an idea, the CBR index is most people use that, which is much the same. I won't go through this count, but basically we've got 5 waves down through here. And that means that we'll get a 3-wave counter trend back up through here as such. Yep. So that's sort of playing out there. That may not go that high, but something like that. That length there's normally got something to do with this length here, actually. So this leg that's coming through here should be in 3 waves, and I'll just move that out of the way for a second. But I can see that this leg down here's got 5 waves. So this is going to play out a little bit further. So this is actually going to be an ABC correction like this here as such for the commodity thing. So this is this trend we're following up here at the moment in the commodities, and the base metals are going to be part of part of that structure. So that will basically be something like that, I assume. Okay. So when we're looking at this, well, if we look at copper, for instance. Just before we go there, actually, I just want to, I'm just sort of focusing on the Australian market today a little bit. Just want to have a look at CBA, just to point a couple of things out here. Bring it up here. Okay, this is still a monthly chart here, but I just want to take it to a daily chart, and I don't want to spend too much time on this particular. As you can see, it's moving up quite strong through here and making new highs and so forth. But I just wanted to point out the sort of the current wave count in here, because I've been a bit lazy on the trading level section, which I apologise for. I'm just finding it very difficult to have time to do the ASX Elliott wave, but I'm not going to give up. I'll just I just got to sort of organise myself a little bit better. But what I wanted to point out here with this particular pattern through here is that this strong wave structure in here is a 3rd wave. We could count up here for wave 1 and back for wave 2, or we could even count up for here for wave 1, back for wave 2, up for wave 1 of a smaller degree, back for wave 2. But whichever way you look at it, this is definitely a 3rd wave moving up through here, and the reason I wanted to point that out for is because we'd be looking at a 5-wave structure like that. Now, the 65 is a medium level here. So it's going to have difficulty here, and we'll see that wave 4 sort of play out through there, and wave 4s can be sideways and complicated, but this is leading the finance sector. So yeah, so look, but anyway, just pointing out that a corrective pattern here before we see further upside there. So getting back over to the copper market here, which is kind of central for base metals. So the nickel, aluminium, zinc and so forth are all pretty much in the same boat in their own little way. But as we've gone back over this before, this is important because the material sector was lagging while the finance sector was moving out strongly. But now we're kind of getting both of them there. And as you know, 3rd waves are the strongest, and we're looking at this little 5 little waves up here, and you can see the wave 3 in here being the strongest. And in this larger structure now, we've got wave 1 here. 5 waves make up the next larger wave 1. Wave 2 here and ABC here make up this. And so now we're going into this wave 3 here. Okay, so wave 3 is going to be longer than wave 1 through here. And as I mentioned, while we've been working through this was an ABC correction here. So we're quite confident that would make new highs here. And that's starting to occur now. So this is kind of the center of this 3rd wave here. Will end up at the 380 up here somewhere. So there's still fair way to go here when we look at it in that sense, because we've got wave 1, wave 2, wave 3 here, wave 4 and wave 5 moving up through here somewhere. So the material sector is going to be positive for a while. So I thought that was good news. I thought I'd share that. So that's that. And the oil market, we can just find charts here. I've got so many charts here that it's a bit tricky to organise them all. Okay, look, the main point here is that The oil market has reached 98. 98 is a profit-taking number. Expect profit-taking there and a larger correction. So it's not going to go anywhere fast. And also, too, you know, the US dollar has moved, getting closer to 79, which is an old low. So the lower that goes, then the higher the indices go, and the indices, the S&P 500, is still working with the 1500, so to speak. So and oil follows stock within a certain degree. So we can expect a correction here. The gold market has moved up quite sharply through here. So that was pretty much every time the Feds do something positive, of course, they've got more money to buy more gold, so to speak. So that's why that sort of popped up quite quickly there. But there's when I was writing the report this morning, the Fed's announcement hadn't come out at the time I'd finished writing, but there's basically, since I started the video, there's no change in the Fed's policy. So everything's pretty much stable there. That's why I've seen gold drop back off just here a little bit. So in looking at the gold as such here, let's just have a little, just trying to find my charts here. Right, just checking here again. Okay, so this from the 1650 here, the medium level that we were looking at is the 15-minute chart here. The other day we were counting 5 little waves up through here, so we knew that we'd have a correction. The correction didn't come back very much, and then I'm assuming that the market was expecting positive news to come from the Feds, and that's the purpose of this here, but that hasn't eventuated, so that's pulling off there. But after a strong move, it's normal, you know, it's already priced in. You'll get your correction from here. So the important thing here, I guess, is that if I can just open this up a little bit through here. $16.80 is important, and as you know, the 16.72 is going to be important as well. Just we could say, I guess, if the 38, if this was going to be a wave 1 and a wave 2 and a wave 3 up through here, which is possible because it's quite strong, we're looking at it as an A and a B and a C wave up through here, and then for it to roll back down. But and that was our target zone up there for that ABC. But because of that strong move there, I kind of got to consider it being a third wave because its personality and structure is like that. So if that's the case, then a correction through here would be a wave 4, which would be the 38.2 retracement level. So that would probably come in at the 1675, which would be fair comment there. So we could say that if it moved down 50%, that's quite a lot for a wave 4 to move back, and then that would bring us into the 1672. So the 72 is important to us, as you know. So if the 1672 became the retested resistance, then that would pretty much confirm that that would be an A and a B and a C. But while it's above that, we do need to consider that we could get a larger 5 waves up in terms of the 1, the 2, the 3, the 4, and the 5 up through there. So we'll just be a little bit mindful of that. But I've also got a possible positive structure to the upside for gold as well. Okay, that's where we're looking there. In that, let's find my larger picture here, because in the larger picture here, this is a daily chart, this move that's moved down through here is still in a 3-wave structure in terms of an A and a B and a C through here, okay? And it counts quite nicely as a C wave and a wave 2. So that's possible, but we've also got to count it as an impulse wave down as a wave 1, a wave 2, and a wave 3 to come down through to here. A wave 3 coming down here should look much stronger, but I'll give it a bit of credit because of the 1650 here. I know it's an unusual number, but it does hold the market. And also this move up through here It's not that clear really. It can be counted as an ABC correction or WXY or whatever, but it also can be counted as an impulse wave as well. So I'm mindful of that. I'm mindful of both counts and just really need to allow it to play out. They normally work themselves into a corner, and we can take it from that point there. So we know that if the 1650 became the retested resistance there, then it will continue to the downside. But while it's support there, we've got to give it some time, and we also understand that we're going to get the bounce off the 1650 as well. So we are going through the bounce, but the bounce so far is in 3 waves, which is corrected like we sort of assuming that it would be, but it could turn into 5 waves as well. And if it turns into 5 waves here, then we'll get 3 waves back, and then we'll get another 5 waves to the upside. So it will work itself into a corner, so just be a little bit patient with it until we get that sorted. Alrighty, let's have a look at FX as the US dollar continues to move down, euro up, and the AUD bounces off the 104. Okay, this is just the daily chart for the US dollar, and just what I wanted to point out here is that we understood that it broke down through here yesterday, and that's fine. Now, the 79 here is really quite important. It's an old support level, so we can see a bounce here. Now, as we see a bounce, when this comes in, there will be support through 10, 20, and 30 through here, but there is support here. And this support will show up in the euro and also the S&P 500 and the other markets as well. Not so much for the Australian market. We'll talk about that in a moment. But this is the US dollar here as such. So we understood it's still unfolding in this impulse wave to the downside. So it's still got more. Just pointing out that there'll be support at the 7900, but we don't normally trade short through subgroup 1 here, 10, 20, and 30, because orders tend to build up at 10, 20, and 30, and it bounces around a lot. So unless you're going to stand sort of way back and allow it to move lower, but you can expect a choppy process down through here, and also a bounce once this wave finishes here. So we've got wave 1, wave 2. We're looking at 5 waves unfolding down through here. So this will make wave 3. So there'll be a wave 4 and then a wave 5. Which the wave 5 won't be very long in terms of length, because the extension is in wave 3. That means that wave 5 over here and wave 1 will be about the same. So, but the good news is that it's moving down, and then we'll obviously see the euro pushing up through here. So we'll see it push up to the it's already sort of moved up there now into so the top of wave 3 is likely to be in now. So we're looking at wave 4 here. You can look at the charts for that though, and then we'll be looking for a wave 5 up. So exactly the opposite of the US dollar. The Australian market's a bit more is a bit different. The Australian market's not moving with the base metals. So obviously there's something else going on, because let's find the Australian dollar here. So the Australian dollar is moving against the commodities. So we need to look in other places, and it's more likely that the US market's being really strong is probably seeing money come out of the Australian bond market, collecting high interest rates and moving back into the US market as such, or other markets. So we've got a weak commodity dollar, and this is likely to it would only be bullish if this top got taken out here. So if this is already sort of moved now, if support was found on top of group 1 here, 10, 20, and 30 on here, then you'd go long from here if tested support was on top of group 1. But that's not the case. So there's the larger bearish picture unfolding here. So the bias is to the short side. But at the same time, too, you need to. This 104 is strong. We pointed that out yesterday. You definitely need to see that as a retested resistance now before going in there, because going in short right now could see a little spike down through here and then a move back up through here. So and you don't chase the breakout to the downside either. So if this moves down through here as such, we don't chase it here. You have to wait for it to come back and test that level there, and if that fails there, then you can kind of start working the trade to the downside from that point, But you need to recognize what is a failed retest here, because if you short it here and it bounces off the first level, then it can just come straight back up. It may not fail at this thing here, so you need that failed retest there to work the short side of it. Yeah. Alrighty, well, that's it. Apart from the Australian dollar moving down against the commodity section, base metals is strong, and as is our finance as well. So they should, they're the ones to look for. Alrighty, well, good morning and good luck.